Hello, everyone. Effective January 1st, 2024, legal business entities are legally required to report their beneficial ownership information electronically to FinCEN. To help raise awareness, we're going to be placing posters and handing out brochures to business customers that this requirement applies to. Today, we will clarify an important aspect of the federal requirement of beneficial ownership information, otherwise known as BOI, for banks and businesses. The differences between our collecting obligations as a bank and the new self-reporting requirements for entities. Understanding these distinctions is crucial for our compliance efforts and our service to our customers. First, let's recap exactly what BOI is. Beneficial ownership information refers to identifying information about the individual who directly or indirectly owns or controls a company. Under the Corporate Transparency Act, which was passed in 2021, the law created a new beneficial ownership information reporting requirement as part of the U.S. government's efforts to make it harder for bad actors to hide or benefit from their ill-gotten gains through shell companies or other non-transparent ownership structures. FinCEN, which is under the U.S. Department of Treasury, is tasked with the handling and reporting of this information. The goal is to enhance transparency in the financial system. This is critical in preventing financial crimes, including money laundering, tax evasion, and ensuring a banking environment that is secure. As a bank, our current role is to gather beneficial ownership information when we establish a new customer relationship by opening accounts with a legal business entity. Here are the key points. First, data collection. We must identify and verify the individual identity who owns or controls a legal entity that is opening an account or making changes to the account that could trigger collecting or updating beneficial ownership. This includes individuals who own at least 25% or more of the entity, as well as those who have control or significant managerial control. Secondly, timeliness. The information must be collected at the time of onboarding and updated whenever there are triggering events resulting in significant changes, such as change in ownership or control. And third, compliance responsibility. It is our duty to ensure that the information we collect is accurate and complete. Failure to do so can result in steep penalties. Now let's discuss the new requirements for the entities themselves. Under the Corporate Transparency Act, a legal entity is required to self-report their beneficial ownership information directly to FinCEN, a bureau of the U.S. Department of Treasury. And here's now what that entails. Responsibility. The responsibility for reporting BOI to FinCEN falls on the legal business entities themselves. For beneficial ownership, a legal entity customer is defined as a corporation, limited liability company, or other entity that is created by the filing of a public document with the Secretary of State, a general partnership, and any similar entity formed under the laws of a foreign jurisdiction. Information on exclusions and exemptions from BOI may be found on FinCEN's website. Also, it's important to note that there is no fee for submitting a BOI report to FinCEN directly on their website. Secondly, updating the information. Entities must also update their BOI with FinCEN whenever there are changes to their beneficial ownership. This could be and include new owners, changes in control, or other significant modifications. And thirdly, penalties for non-compliance. Just like us, entities face penalties for failing to comply with these reporting requirements, which underscores the importance of maintaining accurate records. So, key differences now. Who reports? We as the bank are responsible for collecting beneficial ownership information when onboarding customers. Entities are responsible for self-reporting their own BOI directly to FinCEN. Timing and updates. We only collect at the time of account opening and when significant changes occur, while entities must report upon formation and whenever their ownership, control, unique identifying number, business name, or address changes. And thirdly, data verification. We rely on the information provided to us by the customers, while the entities themselves must maintain their records and ensure they report accurate and up-to-date information. It is crucial for us to communicate these distinctions clearly to our customers. We need to help inform our legal entity customers of their responsibility and to point them in the direction to get started, while ensuring great customer service and fulfilling our own obligations as their financial institution. So then the next steps here. Customer communication. We're going to be providing each branch with informative FinCEN posters to post in the bank, as well as FinCEN brochures to hand out to customers, explaining how they can report and comply with these new federal requirements. Reporting companies that need help meeting their reporting obligations can consult with their professional service providers such as lawyers or accountants. The bank will not be involved with filing on behalf of the customer. This is the business customer's responsibility. Feedback and questions, and as always, your insights are valuable. Please share any questions or challenges you encounter in this process to Stacy Peterson, our BSA officer, and myself, so we can address them together. In conclusion, understanding the differences between our bank's BOI beneficial responsibilities and the self-reporting obligations for entities is essential for compliance and customer service. Thank you for your commitment to navigating these changes effectively, and let's continue to work together to uphold the integrity of our financial system. Thank you.